Welcome to week 6. We have an impressive agenda for this week's lectures, assignments, and discussions, where our areas of concern will be revenues, expenditures, contributions, and distinctive issues of healthcare providers. As a result, you will have a more critical understanding of the not-for-profit environment. Definitely recap and focus on our learning points for this week. Let's launch our particular lecture for this week, which investigates healthcare providers and the challenges they face, including the different accounting and reporting requirements. Because of our country's size of healthcare organizations, notwithstanding the global size of healthcare organizations, our separate attention to this topic is warranted. To obtain a perspective of the size of this sector, note that the United States spends more on health care than any other country in the world. According to a report published by Deloitte, U.S. health care spending is presently exceeding revenue as a percentage of gross domestic product, GDP, and is projected to grow by an average of close to 5% a year to 17% of GDP by 2018. From these statistics, we can conclude that the major issue faced by healthcare providers is the rising cost of providing healthcare services. Healthcare entities differ from other organizations primarily because of the types of revenues and expenses, such as charitable care, fees for patient services, and malpractice claims, just to name a few. Although both governmental and private, non-governmental, not-for-profit healthcare organizations are accounted for similarly, there are also significant differences. Private, not-for-profit hospitals have to follow the provisions of FASB Statement Number 117 as to the form and content of its financial statements. The balance sheet of a not-for-profit hospital, but not that of a governmental hospital, must display the 3 categories of donor restrictiveness. For example, unrestricted, temporarily restricted, and permanently restricted. You can view each of these statements in our textbook. Note also that governmental healthcare entities do not have a statement comparable to the statement of changes in net assets. Other differences relate to the format and inclusions of the statements. For example, the statement of cash flows must be divided into 3 categories of receipts and disbursements, in contrast to the required 4 categories for governmental healthcare organizations. We mentioned revenue previously that was called charitable care. Reflect what this consists of: care that is provided and not compensated for in return. Thus, there are no inflows of cash. So how would we account for $3 million of charity care provided if we were auditors or controllers of a hospital? Also, our hospital is a recipient of the Hill-Burton funds. The financial reporting standards dictate that we should exclude from gross revenue the value of services performed for charity care. However, we, according to the standards, must disclose our policies for providing charity care and the dollar amounts based on our hospital rates, costs, or other measures. Do you agree with this standard of accounting? Some may support the argument of exclusion because the amounts will never be recovered and were never intended to be recovered. Others may alternatively argue that by excluding the estimated amounts from gross revenues, distorted or understated revenues would be reported. Please continue to explore the revenues and expenses and related exceptions while evaluating the impact that these indicators, revenues, have on ratios used to determine the fiscal stability of healthcare organizations. The topic of healthcare would not be complete without mentioning the Patient Protection and Affordable Care Act, ACA, which was passed into law in 2010. Subsequently, changes and continual implementation of this act could have financial reporting implications for healthcare organizations. The bill has affected the healthcare industry. Read more about the ACA at Patient Protection and Affordable Care Act 111. See complete bill at this address.